Obviously, you've mentioned that these results could change as a result of a potential $1 billion charge. How confident are you at this stage that you can bring that number significantly below the $1 billion level?
Oh, it's tough to say. That whole matter, it relates to things that we've disclosed in the past, but the back and forth that we're having just began this week, so we'll know when we know. So we thought it was important to go ahead and announce our earnings and allow that to run its course.
Talk to me about...
in the meantime. And the results for the quarter... Oh, go ahead.
No, please, carry on.
Oh, sure. I wanted to frame the results for the quarter. You had mentioned some of the moving pieces. The total for the quarter in net income was $5.9 billion. We generated a more than 12% return on equity and an almost 15% return on tangible common equity. There are a lot of pieces of the drivers of the business that were actually very good this quarter. Our capital, our liquidity, credit quality, never better. More going on between us and our customers in card payments, up both debit and credit, high single-digit growth year over year. Growth in primary consumer checking accounts. Those are the customers that we do the most with. That's actually very exciting. And all while we're investing a lot in building a better Wells Fargo, a more modernized company, more improvements in compliance and risk management, some of the topics related to that consent order. So all that happening while producing high-quality results. But there is this question of when and at what level we'll finish that negotiation.
And that's the problem, because investors
really,
right now...
on that particular topic.
Yeah, investors right now are just waiting, I think, to be convinced on this. Talk to me about the lending business, because you didn't really mention that in much detail, and I look at it down somewhat, $11 billion from a year ago. Just explain what's going on there. Is this a case of you effectively losing market share here, or is this about the constraints now that the Federal Reserve has put on you with regards growth?
Yeah, actually, it's neither of those two things. I'd split the lending businesses into businesses where we've tapped the brakes because we're either winding down legacy portfolios or we don't like today's risk. There, I would say home equity loans, pre-crisis single-family mortgage loans, certain types of commercial real estate loans, and lower credit quality auto loans, we've slowed down on purpose, or in some cases we've been liquidating. In the businesses, C&I loans generally, jumbo mortgage loans, credit card loans, et cetera, we're growing at the same rate right on top of the industry as a whole. It just so happens that because we're the largest lender, we do have a big mix of some of those legacy businesses and some markets where we're not crazy about today's risk reward, that shows up in the numbers as well. But with the roughly $950 billion worth of loans, it's going to reflect the full breadth of the economy. I
mentioned the Federal Reserve's attempts to restrict your growth and the sanctions they've put on your business and the measurement that you have of risk and what's going on in the business itself at this moment. Is that curtailing your efforts to improve the situation as far as the bank is concerned and go out there and drive new business? Because I've seen various reports of what the profitability dent will be as a result of these constraints. Have you been able to quantify it yet? Do you have a sense?
We have, sure. So the constraint, if there is one, is on certain types of deposits that we take in from other banks. There were other large cap banks who, in the last couple of years, have turned away those deposits because under leverage ratio constraints, they were not good business for them to do. We've done more of that business because we didn't have that leverage ratio constraint. So with this new potential constraint, that is the first business that we've cut back on. Those tend to be high-cost deposits. They tend to be low liquidity value deposits. And so the last $50 or $100 billion worth of our total balance sheet are those types of deposits. When we talk about curtailing them in order to comply with the asset cap, it produces on the order of $300 to $400 million worth of net income impact over the course of the whole year. It was negligible in the first quarter. More of that is back-end loaded in 2018. As it relates to the mortgage business, the C&I businesses, the other businesses where we're competing vigorously, and just in terms of the organic growth prospects, the size of those markets, our share in those markets, it doesn't curtail any of that. It's really focused on other institutions who deposit their cash in Wells Fargo, and at the margin, we'll do a little bit less of that.
John, as you pointed out, the business is chugging along. You've just said, look, the constraints that the Fed's putting on you is negligible. You pointed out your return on equity here. I mean, it's comparable to the likes of JP Morgan as well. Why aren't investors rewarding you for those numbers? What more do you need to do? Do you need to beef up compliance further? Is it just about trust at this level? What more can you do?
I think that solving matters with our regulators over the course of the next couple of quarters on items, they're the same items that have been in play for the last year or so, but there's sort of a delayed effect of the regulatory relationship mending. I think that will probably help a lot. If we continue to produce results the way that we have, with returns where they are on the capital base that we have, the investor reward will take care of itself over time. This level of profitability, these types of returns, even if it's not fast growing, still compare very favorably against the best in our category and top tier large cap banks.
And there's no more bad news to come.
Fair. That's fair. That's I think that people would like to know that whether it's a replay of previously disclosed bad news or anything else that's uncovered in the process of looking at every operation, that comes to an end. I think that's fair.